Welcome back everyone to part 2 of our week-long video series of how to get the best bang for your buck. What is the right investment for you? That's what we're talking about this week. Now if you're brand new to the channel, my name's Josiah. I trade stocks and cryptocurrencies for a living and I am a full-time investor. Now if you want to learn how to be able to break free from the rat race and live financially free, make sure you're subscribed to the channel, hit that notification bell, and do me a favor, give me a thumbs up if you like this kind of content. Now, let's get into it. Now, yesterday we talked about real estate, because that's the one thing the gurus are always going around saying that is the best investment out there. And I beg to differ with that fact. I said yesterday there's some great perks to real estate, and I personally love real estate. But there's some downsides too. So if you missed that video, go back, check out yesterday's video. You're not going to be disappointed. There's a lot of things on there that people just aren't telling you about real estate out there. Now, day 2, let's get into the next investment. Let's talk about dividend-paying stocks. Now, what is a dividend-paying stock? If you're not familiar with that, a dividend-paying stock is a stock that pays you simply for holding it. Now, there's a lot of these out there. You can Google them. It's your big blue-chip companies. Ford, McDonald's, 3M, a lot of your energy companies, a lot of your banks. These are dividend-paying stocks, and it's not hard to find them. And you can find yields anywhere from about 1% up to, there's some of these companies that might be paying over 100%. However, those are far riskier, they're not stable, and the stock tends to lose a lot of value every time there's a dividend. So what we're going to be talking about is your solid dividends. If we were putting together a solid dividend portfolio of good companies that had a long-standing track record of always paying at least their normal dividend, if not a little above, then it's pretty easy. We could put together a dividend portfolio paying between 5 to 7%, super easy. If we got a little creative, we could probably bump that up a little bit. But let's go ahead and assume a median there of about 6% dividend. Now that's not bad. We got $100,000. That's the same reference we used yesterday for real estate. So we're going to stick with that theme throughout the week. So if we invested $100,000 into some good dividend paying stocks, giving us an average of 6% return, that's $6,000 a year in free cash flow. Well, that sounds pretty good. We're getting paid just for holding our portfolio. That's not bad at all. Now, there is some downsides to this because most of these companies are already mature companies. So they don't have huge growth. McDonald's is not going to go up 100% in a single year. So dividend stocks tend to have a slower growth rate, but you're still going to get some growth on them. Maybe 8, 10, 12% depending on the companies. So let's just say you're getting about 10% return or growth on your money, should we say. So over a 10-year period, this is going to double. And that's not too bad. That's not as great as real estate because in real estate, you're leveraged. Here, you got $100,000, you're able to buy $100,000. But unlike real estate, where we had other things we had to worry about, at least with this, we got nice steady money coming in. That's about $500 a month every month, and we don't have to worry about the HVAC system breaking down or something. So there is benefits to this. And $6,000 doesn't seem amazing, but if you got $1 million you can put into this, well, now you're talking about $60,000 a year, and that can probably pay your bills. You can probably do all right if you had $60,000 coming in that you didn't even have to think about, which is going to kick us off on one of the great things about this, and that is the skill level. You don't need much skill. Anybody can do this, a little bit of research online, and you can find some good dividend stocks and put together a dividend portfolio paying you this. So we're going to get really high marks over here for skill because it just doesn't take much skill. So that's great about this. Now, another advantage to this is going to be our taxes. as a long-term investor, you're buying this. If you're buying a dividend portfolio, you're not trading. You're buying this, you're putting it in a corner and letting it do its thing. So by doing that, you are going to be taxed on what's called long-term capital gains tax. Now, this is a lower tax bracket than if you're day trading or something like I do. So taxes, depending on where you're at, might be around, say, 15%, which isn't terrible. However, depending on your skill level, just like we talked about yesterday, one of the advantages of real estate is there's so many tax advantages. However, if you're smart, if you're doing your research, if you're doing this the right way, you can get these taxes down to zero, or at least real close to it. So taxes is not something that I overly concern myself with. However, a lot of people out there, I know that that's a big deal. And so this is one of the better ways to go, because you get not as many tax advantages as real estate, but you're not getting taxed overly heavily either. So that's not too bad. Skill, super easy. Anyone can get into it. Income, this is going to be stable. $500 a month is not a huge income, so we're not going to give ourselves a huge score over here. Oh, let's go ahead and give it a 2. Remember, we're rating these 1 to 3. 1 being the worst, 3 being the best. So we're going to give this a 2, not because it's a super high monthly income, but because it's stable. We don't really have to worry about this. This isn't going to vary by very much. It's going to be nice and stable if you put together a good basket of dividend stocks that have a long history. This is where they have been paying the same thing year after year after year after year. So that's pretty good. Now, what about our overall return? Well, we're getting some growth on our money, and we're getting a steady dividend. So overall growth, not too bad. We're not leveraged, but overall, not too bad. We'll go ahead and give this a 2 for overall return, because we're making a nice steady return there. We're making a nice steady return there. If we get 10% here and we're making 6% here, then overall we're coming up about 16% on our overall portfolio, and that's not bad growth. That's not bad at all. I'm pretty happy with that. Now, what about the extra money required? Now, this is a line that I put in just for real estate, because one of the things they never tell you about real estate is that things are going to tear up. You're going to have some money on the side to be able to fix it, because otherwise you've got a place that you can't rent out because the heat went out in it, or the air conditioning went out in it, or the hot water heater bust. If you don't have some money set aside, then you're going to find yourself in a lot of trouble. So, extra money required, we needed that. That was a yes on real estate, but over here, that's a hard no. We don't need anything else. We don't need anything else when it comes to extra money. We had $100,000. We spent it into some good dividend-paying stocks. Now we're just going to sit back and let it do its thing. So that's the beauty of dividend-paying stocks. Tomorrow we're going to talk about another topic. And like I said, we're going to round this week out with kind of a recap of all the different investment strategies. And you can figure out what works best for you. So I hope you enjoyed this. Until next time, be blessed. And remember, never trade with your emotions. Always trade by the numbers.